What's up, millennials? TTCF has come down about 40% in the last couple of months, so is it an opportunity right now? Today we're going to take a look at the fundamentals of the Tattoeed Chef, their valuation, and of course some technical analysis, so let's do it! First of all, if we go to Seeking Alpha, we can see that there are quite some bullish articles about the Tattoeed Chef, of course, right now. Since basically January of this year, almost all the articles have been bullish. One is neutral, but the other ones are bullish or even very bullish. And we're going to dive into one of these articles right now. We're going to dive a little bit deeper into this article on Seeking Alpha, which is written by Eric Lim, and he is very bullish on the Tattoeed Chef right now. We're going to talk about a few fundamental things, of course, for the Tattoeed Chef. First of all, according to their latest Q1 filing, they're going to acquire another company, which is Foods of New Mexico, which according to this writer is a very bullish sign for this company, for the Tattoeed Chef. And we can also see that the demand for the Tattoeed Chef's products is very strong right now. We can see that, for example, he is very close to a Target store, this writer of the article, of course, and he can see that the consumer demand for the products of the Tattoeed Chef is increasing quite rapidly. We can also see that exact same thing happening in the Q1 numbers, because we can see a massive growth from 4,300 stores to 6,065 stores in all just 1 quarter time. So that is from basically January up until the end of March, which is pretty insane. And we can also see that the points of distribution have increased quite a bit as well, from 23,000 at the beginning of this year to 31,000 at the end of March this year, all again in just 1 quarter. With regards to the expectation for the next quarter, so the next 3 months up until the end of June, we can see that the company still expects massive growth ahead. We can see that they expect to go from, again, that 6,065 stores to 7,227 stores, and also from 31,000 points of distribution to 39,000 points of distribution. So that growth is pretty spectacular for sure. During the earnings call, the company has also talked a little bit about inflation, because right now a lot of investors are a little bit scared because of inflation. But we can see that the Tattoeed Chef has actually some contracts in place which are for 1 year exactly. So they already have a fixed contract with their producers of the raw materials that go into their food, of course, and also the farmers. So they are kind of protected from the inflation in this industry. So that is pretty good to see. And again, yeah, according to the Federal Reserve, according to ARK Invest, according to Meet Kevin, this inflation is going to be temporary. It's likely going to be less than a year, probably even likely less than about 6 months or so. So it does look like the Tattoeed Chef is protected against that inflation risk. Now, we can also see that according to the Q1 filing, that the Tattoeed Chef currently has about $185 million in cash, which is pretty solid, of course, right now. And yeah, right now it is about 13% of their current market cap. And we can also see that they had about, or they're going to have about $240 million in revenue for this year, for 2021. If you take into account that they currently are operating at a market cap of $1.6 billion, then that means that there is a price to sales ratio of 6.5, which is actually on the rather low end, if you will. So 6.5 price to sales ratio, definitely not expensive at all. Now, if we look at this table over here, we can see that the revenue for 2023 is projected to be about $630 million, which is partially because of the acquisition we just talked about earlier on in this video of the Foods of New Mexico. And that is going to bring in about $200 million in revenue in 2023. And also the Tattoeed Chef itself is also going to have about $430 million in revenue. So if you have $630 million in revenue in 2023, and if you would apply a multiple, a price to sales ratio to that of 6.5, then you would arrive at a market cap of $4 billion. So that is about like 2.5 times the current market cap of the Tattoeed Chef. So you could potentially more than double your money in about 2 years' time. Also, if we go to the website of marketbeat.com, we can see some analyst ratings. Right now, the analyst rating is a buy at $23.50, while the stock is trading more or less at $19.20 right now. So that does mean that according to the analysts, there are also some expectations that the stock is going to go higher over time. Now, before we hop into the technical analysis part of this video, keep in mind that technical analysis doesn't work in 100% of the cases, but I do think it's a very important tool to have in your toolbox, apart from, of course, things like fundamental analysis and valuation. So if you also want to learn how to read charts like me and make objective decisions, then definitely check out nesami.com/TA, because I recently launched a program about technical analysis for absolute beginners. So now we're going to analyze the stock of the Tattoeed Chef, which trades under ticker symbol TTCF, of course. And first of all, let's dive into the candlesticks, because it does look like, and right now, by the way, we are on a daily time frame, so every candlestick is 1 day of price action. And we can see that we are potentially in a reversal right now, because in the past, in the last coming months more or less, we did see that we were in a downtrend because we were making lower highs and lower lows. But right now we have a higher low in place, which is we have a low over here, which is a higher low compared to this low over here. And now we're also going to create a higher high over here compared to this high over here. So that is definitely a good sign that we are likely in an uptrend right now, and we could be right now in a reversal. Then let's take a look at the levels of support and resistance. First of all, we can see that the level of $16.50 has been quite an important level in the past, not only in the last couple of weeks, but also in the past like a few months or even like half a year or so, since July or even June last year. So yeah, $16.50 definitely has been an important level all the way. Right now we have been bouncing off that level at the end of April, and right now also at the beginning of May. So I do think that is a very important level to look at. Also, the $18 level seems to be a very important level too, not only in the last couple of weeks and months, but also way back here in June 2020. So I do think that is an important level to look at too. And then the $21 level seems to be an important level, because that could definitely act as a level of resistance in the future. So in the short term, I wouldn't mind seeing a test back to $18 more or less, but then continue the uptrend to the upside and likely go to $21 instead. Then let's talk about the exponential moving averages, the EMAs. And for now, we're going to take a look at the 21 and the 55 exponential moving average. So let's first talk about the 21 EMA, which is this purple line over here. This purple line has been used as resistance in the last couple of months, actually, since about February this year of 2021. But now we have definitely crossed above the 21 EMA. And let's now see if we can use the 21 EMA as support instead. Now, that does mean that the price action could come down a little bit to, again, that level of about $18 per share, because that is where the 21 exponential moving average is at right now. And we can also see that if we take a look at the 55 exponential moving average, which is the white line over here, the 55 EMA has also been used as resistance in the past. Over here, for example, we can see that it was used as resistance in the beginning or in the middle of March of 2021. It was also used as support over here in January 2021, and we can see more moments like these and this price action over here, which definitely was held up because of that 55 EMA. So we can see that the 55 EMA is usually very important, and just a few days ago we had a daily candlestick closure above the 55 daily EMA, which usually is a pretty good sign. But sometimes what you do see happening is that the next couple of days it does actually dip quickly back below that 55 EMA. So let's see what happens in the next coming days, because yeah, it definitely can come down a little bit more to, again, that level of $18 per share. Then the Bollinger Bands, which is an indicator that I don't use that frequently, but I do think it's interesting to look at it right now, because we do see that we closed a daily candlestick closure above the Bollinger Bands. And the previous times when that happened, which was, for example, over here, and this was, for example, the 14th of December 2020, we saw that initiated a massive move back to the upside in a very short amount of time. We can also see that something similar happened here on the 24th of August of 2020. We also had a daily candlestick closure above the Bollinger Bands, and also that initiated that very quick move to the upside. So let's see if we're going to see something similar right now, if we're going to see a massive move back to more or less $25, $26 per share in just a few weeks or even months' time. And all of this is accompanied by solid volume. If we scroll in, if we zoom in a little bit, we can see that the volume right here has been increasing in the last couple of days. So that is definitely a good sign. That is also something you always want to see in an important move to the upside in this case. So the volume is above the exponential moving average or the moving average on the volume bar, which is definitely a solid sign. We're also going to check out some indicators. First of all, the RSI, which right now is definitely in a bullish posture. We can see that the RSI is also creating higher lows and higher highs, the RSI being this blue line, of course, and it is right now trading above the EMA on the RSI, the EMA, the exponential moving average, being this white line over here. So that is good to see, of course. We also see multiple drives of bullish divergence, meaning that the price action is making lower lows, whereas the indicator, in this case the RSI, is making higher lows, so that's also a good sign. And then let's also take a look at some other indicators, which is the crown trading stochastic, because we can see a pretty interesting sign over here right now, which doesn't happen that frequently. First of all, we can see that the blue line over here, which is the fast reacting stochastic, has crossed the pink line over here, which is the slowly reacting stochastic, and then the blue line uses the pink line perfectly as support, which is a sign you don't see that often, but it usually is pretty strong. We can see something very similar happening over here back in, I think, July 2020 and even August 2020. We can see that, again, this blue line crossed the pink line, went up, then came back down, used the purple or the pink line as perfect support, and then went up to the upside. And we can see if we go to the price action, that was actually a beautiful moment to buy, because right after that, a few weeks or even months after that, the price went up very quickly. And then the last indicator, which is going to be the MACD, is also in a pretty bullish sign right now, a pretty bullish posture. We can see that the MACD, which is the blue line, has crossed the signal line, which is the orange line over here. And now we see that the blue line, the MACD, is using the signal line pretty well as support. So that is always a sign you want to see. And if we scroll out a little bit, we can see that the MACD still has a lot of room to go if you compare it to these three different drives in the past. So in the future, I wouldn't mind a few days of red price action, but in the longer term, in the next coming weeks, then I would be more bullish than bearish for sure. If you look a little bit more at the macro, so if you zoom out a little bit in the next coming months or even years, I would consider this actually as an opportunity because of not only technical analysis, but also because of the valuation and the fundamentals of this company. But of course, that is not financial advice. You always need to make up your own mind about this. So in general, the fundamentals for the Tattoeed Chef seem pretty solid. They are acquiring more and more companies, they are growing rapidly, the demand for their products is increasing over time, and the technical analysis does look pretty solid too. Now I'm also very much looking forward to hearing from you as well. Are you long-term bearish or bullish about this company, the Tattoeed Chef? Let me know in the comments. And with that being said, thank you very much for taking the time to watch this video, and I hope to see you in the next one. Bye bye!